Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of corporate filings so you don't have to. Today, we're diving into Allurion Technology's latest 8K filing, and let me tell you, it's a bit like trying to swallow a balloon without any water. There's a lot to unpack, so buckle up. This report signals some big moves for Allurion. It's all about raising money and potentially changing some things about how their stocks work. Let's get into it. First up, the big news, a material definitive agreement. In plain English, this means they've made a significant deal. Allurion entered into an agreement to sell shares of their stock in something called common warrants to some investors. These investors are considered accredited, which means they meet certain requirements about how much money they have. Basically, Allurion is issuing and selling 900,000 shares of their common stock. That's the regular stock anyone can buy, along with 1,800,000 accompanying common warrants. Think of warrants as coupons that allow you to buy more stock in the future at a set price. This whole thing is happening in what's called a private placement, meaning it's not offered to the general public. The price? $5.23 per share and warrant. This stock and warrant sale should give Allurion about $4.7 million before they pay fees and expenses. They plan to use this money to test if their Allurion balloon, combined with a certain therapy, has an effect on muscle mass and improves therapy adherence. They also want to use it for general expenses. To help with this offering, Allurion hired Roth Capital Partners as their placement agent. Think of them as the deal maker. Roth will get a fee equal to 7% of the total money raised. They'll also get reimbursed for some of their expenses, up to $25,000. The sale of these shares was already approved by the Securities and Exchange Commission, so they are following the rules. The agreement with the investors includes the usual promises, conditions, and protections for both sides. Here's a catch: those common warrants we talked about, they can't be used right away. Allurion needs to get approval from their stockholders, the people who already own stock in the company. This approval is needed because of the New York Stock Exchange rules. Once they get the green light, the warrants can be used to buy more stock at $5.23 per share and will be valid for 5 years. Allurion doesn't plan to list these warrants on the stock exchange, so they can't be easily traded. Allurion promises to hold a special meeting by March of 2025 to try to get stockholder approval. If they don't get approval then, they have to keep trying every 60 days until they do. Next, Allurion also made a deal with an investor connected to Leavitt Equity Partners. It's called a subscription agreement. Under this deal, Allurion is selling about 267,686 shares of stock and warrants to purchase up to 535,372 more shares to Leavitt. The total price is around $1.4 million, again at $5.23 per share and warrant. This deal is closing around February of 2025. Allurion has to file paperwork with the SEC by April of 2025 so that Leavitt can resell these shares later on if they choose. They'll work to get this approved as quickly as possible. Leavitt already owns some warrants from July of 2024. These warrants originally let them buy stock at $30 per share. Because Leavitt is buying more stock now, Allurion has agreed to ask stockholders to lower the price of those old warrants down to $6 per share. The shares and warrants being sold to Leavitt haven't been registered with the SEC, meaning they can't be resold to the public unless they get registered or qualify for an exemption. Here, they are basically saying that the sale of these stocks was not registered, and that it was done under specific rules that allow companies to sell to certain accredited investors without registering. The investors confirmed they are accredited investors and are buying the stocks for investment purposes, not to resell them to the public right away. Allurion announced these deals in a press release in February of 2025. First press release talks about pricing of the offerings we just mentioned. Second press release talks about closing the deal. This section lists the different documents included with the report, like the agreements with Roth Capital and Leavitt and legal opinions. So what's the big picture here? Allurion is raising money through these stock and warrant sales. It seems like they need the funds for research and general operations, but there are also some potential risks. One potential weakness is that Allurion needs stockholder approval for some key parts of these deals. If they don't get that approval, it could cause problems with the warrants and potentially change the terms of the agreement with Leavitt. This could affect the amount of funding that they expected to receive. The opportunity here is that if the clinical trials are successful, it could lead to new products and market expansion. But of course, this is dependent on those trials succeeding. In conclusion, Allurion is making some bold moves to raise capital. Whether these moves pay off depends on a few key things. The success of the clinical trials will also impact their direction. Thanks for watching. If you found this breakdown helpful, please subscribe for more corporate deep dives.